The world's second largest economy is grinding to a halt. China's juggernaut, which also kept the world moving, is slowing down. Its economy has slipped into deflation as the consumer price index, which is the main gauge of inflation, fell by 0.3% year-on-year in July for the first time in more than 2 years. The producer's price index, which tracks prices at the factory gate, dropped by 4.4% in the same period. This is the first time both the indices have been negative since November 2020. China has had a tryst with deflation in the past too. The country experienced a short period of deflation at the end of 2020 due to a steep collapse in pork prices. Prior to that, the economy faced a decline in 2009. Adding to the woes, China's exports contracted 14.5% and its imports dropped 12.4% in July year-on-year. Analysts suggest that the decline in exports, a major driver of China's growth, has been due to lower prices, while the volume of goods have reached pre-pandemic levels. China's exports to the European Union have slipped by 39.5% from last year to $42.4 billion, while exports to the US have fallen by 23% to $42.3 billion. So, how will this affect the world economy?
Some analysts in the West are arguing that this could be a good news for the Western economies. The Chinese, who are the suppliers of intermediates and also finished products, if they suffer fall in, they suffer deflation, their products become cheaper. It'll be helpful for the Western economies to overcome the inflationary spiral that they have been experiencing. But that may not be the case, because if like I said, that China has been influencing global growth. If the global growth slows down, then it's going to have all-round effect, the benefits that may be very short-lived.
An IMF report earlier this year predicted that India and China will account for half of the world's growth this year. The organization had said Asia Pacific's GDP will expand 4.6% this year. The IMF had pegged the world economic growth at 3% for 2023, but with the recent economic slump in China, those numbers might see a revision. As a major player in the global supply chain, a decrease in Chinese demand will affect economies that depend on exporting goods to China. Falling Chinese imports can lead to reduced growth in countries reliant on these exports, thereby dampening the global economic outlook.
There is going to be a negative impact on the global economy because, in a sense, the global economy has become addicted to a very rapidly growing China. But there are other aspects we have to take into account. You see, China's role in the global economy has been very much determined by its positioning itself in the global value chains and global supply chains. So it has made itself, in a sense, to be a indispensable partner. In the short term, moving away from these global supply chains in which China is the dominant partner, this is unlikely to happen.
For India, the consequences of a slump in China's economy are multifaceted. Data from China's General Administration of Customs, or GAC, suggested India's imports from China fell 0.9% to $56.53 billion in the first half of 2023, as against $57.51 billion in the first half of 2022. However, due to weak demand in China, India's exports to the country also fell by 0.6% to $9.49 billion in the first half of this year.
Negative effect on India will be through the negative effect of a slowing Chinese economy on the global economy. Because, as you know, 30% of the global growth rate, GDP growth rate, is accounted for by China. Second aspect is that, of course, this should open up opportunities for India. India has the opportunity to position itself to become a more attractive destination for investment, also as a major trading partner for the rest of the world.
For us, cheaper Chinese products flooding our markets has always been a threat. irrespective of what is the situation in China. There's a greater possibility of these Chinese products coming into the Indian market and affecting our own industries.
China's deflation stands in sharp contrast with the other big economies which are reeling under high inflation. The scars of a stringent lockdown, it seems, are still fresh in people's minds. And to make them loosen the purse strings will need efforts from the government. Some experts see stimulus measures from the government, including tax cuts.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.